Hey traders, this is Blake Morrow with Traders Summit, and with me today I have Mr. Michael Brown from Caxton FX. He's the senior currency analyst there. How are you?
Hi, Blake. I'm very well. How are you? Thanks for having me.
Thanks for being here with us. I'm actually really quite excited about meeting you in person, or as much as in person as this is, but getting an opportunity to talk to you and meet with you. I think watching your weekly outlook on the FX markets really helps not only myself, but other traders out there. So I was super excited to meet you today. So tell us a little bit about what Caxton does.
Well, firstly, I'm very glad to hear that it helps you and helps many others. It's worthwhile me putting those out there still. In short, Caxton is a deliverable foreign exchange company based in the city of London. So we focus primarily on the corporate market, on the business-to-business market, and we facilitate foreign exchange transactions from very simple spot trades all the way through to the most complicated derivatives that you can think of that our clients may wish to partake in, for anything from very small one-man band businesses all the way through to the largest enterprises, and we can facilitate any currency or cross-border payment requirement that they have.
Wow. So you're really dealing with more of exchange rates, how it affects the bottom line of more corporate customers, basically.
Exactly that. Yeah. So we're not a speculative trading house or anything like that. We're dealing with customers who have to transact. They've got a genuine requirement. They need to pay an invoice or pay a supplier or receive goods, whatever it may be. They need to transact over a certain time period. And essentially our job is to not only get them the best possible exchange rate, but also try and guide them through that process in terms of, as you said, maximizing the rate that they achieve, and also minimizing the risk and the exposure that they have from FX on their bottom line.
That's pretty cool. I think that's a side of the business that not a lot of people recognize is so important to the global businesses everywhere. They really focus on, especially some of these wild moves that we might get in currencies, right?
Yeah, and also, as we all know, the world has become so interlinked and globalized over the last couple of decades. I know we're starting to see some of that reverse as we move into the sort of post-COVID world. But there is, and it is a huge part of the market. Everyone thinks that, the only reason currencies move is because people are betting the pound's going to strengthen or the Fed are going to do X, Y, Z. Well, actually, a big chunk of the moves that we see in the market are just genuine need, changes in supply and demand, and genuine corporate need for moving money across borders. So as you say, I think it is perhaps a side of the market that is underappreciated generally.
Totally, 100% agree with that. So let me ask you this: what you do for Caxton FX, are you more customer facing, or are you an analyst where you generate some of the ideas and of what you have to present to your customers?
Well, it's a bit of both, to be honest with you. I'm not one of these analysts who generates the ideas and then goes and hides in the broom cupboard. I'll generate the ideas and then go and present them myself. Put a face to the idea or a face to the name for our clients. So it is a little bit of a hybrid of both. But I do like getting out there and speaking to our clients and presenting ideas to them and guiding them through the process, and actually enjoying being able to do that in person once again. You obviously see I'm here in the office today. It's nice to not be stuck at home in a study. I'm sure your office is very nice there, Blake, but I do like coming back into the city and actually seeing people once again. It is part of the job I enjoy.
I think it's awesome, and it's something that somebody like myself who's been trading from home in this location for a decade. Yeah, I can appreciate what you're doing right now. So let me ask you this: based on what you're seeing right now, let's talk current markets. What's like the bigger theme out there that you're pushing out to your clients? Are you seeing inflation? Is it dollar strength globally? It's gonna make its way through the rest of the FX space. The weakness or the strength in the renminbi. What theme are you really looking at right now in the markets?
Yeah, I think there's probably a theme that I'm looking at and a theme that our clients are looking at, and they're slightly different. Everyone you speak to asks about inflation. Every single person you speak to is saying, is inflation here to stay? Are we going to get really sticky inflation? Is it going to be, a problem like we saw in the 70s? And I would argue it's not, but it's also not going to be quite as transitory as everyone, myself included, probably expected it to be, 3 or even 6 months ago. We are going to see that last a little bit longer. But I think the reason why everyone asks about inflation is because if you don't follow the financial markets too closely, it's a concept that you can relate quite easily to. You see, your gas prices going up. You see the prices of the food you're buying, the prices of the petrol you're buying at the petrol station going up. So it's something that you can relate to quite easily and think that's going to become a problem. But I think what is my big sort of market theme at the moment is policy tightening. And I think that's probably quite a UK-centric one, because we're seeing both monetary policy and fiscal policy tightening at the same time. And we've somehow ended up in this situation where over the last 3 months or so, the Chancellor and the Bank of England have managed to back themselves into a corner through completely their own doing of deciding that both policy levers, which have been fully open and firing on all cylinders for the last 18 months, are now going to be rapidly tightened again. You've seen, obviously, the money markets went slightly mad on Monday, pricing in 50 basis points of tightening from the Bank of England by year end.
Yeah.
And I think the big risk now is that you've seen the market price in all this tightening. You're now going to see the market have to price out all of this tightening, because I don't think there's any way that the Bank of England are going to live up to the hawkish expectations that the market has priced in. 5 hikes by the end of this year just isn't going to happen. So there's a risk that gets priced out, and that will obviously be a headwind to sterling. But I think there's also a risk to that more broadly, because if you look at money markets in general, we're pricing in a 10 basis point ECB hike by the end of next year. I mean, there's more chances of pigs flying past that window behind me than the ECB hiking rates by the end of next year. So is that going to be a headwind to the euro? And it's a similar thing if you look at Canada, you look at Australia, you look at New Zealand. Everywhere you look, you've got this environment where the market, I think, has gone kind of too far too fast in pricing in policy tightening.
Sure.
And you're going to see it priced out quite rapidly. And as a result of that, I think where you've seen currencies gain ground against the dollar over the last couple of weeks, actually those rallies could be built on sand. And actually those gains could evaporate quite quickly, because the only place, the only currency, the only country, the only economy where market pricing is even remotely in line with what a central bank might do is in the US. So actually, I think although we've seen a little bit of wind come out of the dollar's sails over the last fortnight or so, and we've come off about 1% from those 12-month highs on the dollar index, I do think the longer run outlook of a relatively hawkish Fed, at least in line with what the market price is, coupled with decelerating global growth, I do think the outlook remains constructive for the dollar. And I think the gains we've seen for some of these other G10 currencies could be rather temporary or transitory in nature.
That's interesting. I'm so it's interesting to hear your views on that, especially with the Bank of England, because it has been quite an aggressive move in rates. So let me ask you this, then, we've seen the euro sterling move lower. I'm sure you deal with so many, not only UK based companies, but also European based companies.
Yeah.
So this move lower in the euro sterling, should we believe it, or what are your thoughts there?
I think we should. To be honest with you, I mean, firstly, it's nice to see euro sterling move, because for about 9 months or so, it's gone nowhere. I mean, if you're trading that as a retail trader speculatively, then you must have the patience of a saint, because, I mean, even sitting there as a pure observer, it gets boring. But anyway, yes, I do think we should believe it, because although I think the market's got a little bit ahead of itself in terms of what it's expecting for policy, euro sterling moving lower, short euro sterling, however you want to phrase it, we are going to see a big divergence between the BOE and the ECB. Not to the extent where the bank are getting bank rates of 1.25% by the end of next year and all the rest of it. But, the ECB, every man and his dog knows that when the PEP program expires, they're going to wrap it up into a new name and keep buying every bond they can find, and they're going to keep rates pinned at zero for as long as they can. Whereas the Bank of England are probably going to disappoint dovishly compared to the market expectations, but at least they're talking about tapering. They're talking about how they're going to unwind their balance sheet. They're talking about rate hikes. So you've got that good old-fashioned monetary policy divergence. So I do think, although some of the other G10s are probably a bit overextended, I do think that move in euro sterling is one that we should believe, and is one that will probably continue over the next kind of 3-6 months.
Wow. All right. Well, that's great to hear because yes, as a retail trader trying to trade the euro sterling has been exciting to say the least. But Michael, I want to say it's actually been quite nice having you on here. I'd love to invite you back and have you on and get your views again sometime in the coming weeks. And I have to say,
I'd love to be back. If you'd be kind enough to invite me, I would gladly accept.
I would love to have you back. And on behalf of the Trader Summit community, thanks for joining us today.
No, thanks for having me.
And oh, wait, before I go, I need to ask you, I just needed to ask you this.
Was there something else?
one last thing. If I'm a trader and I want to see your weekly video, I know they can get it here on Trader Summit, but where else can I follow you?
You can follow me anywhere. Twitter is where I'm most active. The username is Mr. M Brown, MRM, and then the surname Brown. That is where I'm most active. Markets and anything else I have a penchant to moan about. If you can put up with that, you might find once in a while some insightful market stuff on there. I
do find you on Twitter very insightful, and I love it when you engage in conversations with some of your peers that I know you've worked and traded with in the past. It's actually great banter to listen to you guys or to read your banter between you guys. So that's awesome.
No, it's all good stuff. But thank you very much for having me again.
Thank you, Mr. Brown. We'll see you soon.
Cheers, Blake.
All right. See you, Michael.